capital recovery factor. So friends, as we saw in the context of compounding, we understood something which is known as sinking fund factor. And I'm sure all of you can recollect how the sinking fund factor help us. Sinking fund factor will help us in finding out as to how much amount of investment that I must make periodically at a certain rate of interest, so that at the end of the annuity I am able to generate a target sum uh, to happen. So that is how I will get to know by using the sinking fund factor. Now, if I have to find out if I have to find out the other way around, meaning what? Meaning, suppose if I am taking a loan from a bank for a home or for a car or for something else, and if I want to find out as to what is going to be my EMI, how much amount, what is going to be my EMI, how much amount I will need to pay every month, so that at the end of the annuity, not only I am able to pay interest on this loan that I am taking, but I am also able to repay the loan that I have taken, right? So how do we find that out? We will find that out by using something which is known as capital recovery factor. And how do we calculate the capital recovery factor? Friends, again, please note, you can see it very clearly. Capital recovery factor is nothing but inversely opposite of the present value investment factor of an annuity. So what was my formula for finding out present value investment factor of an annuity? My formula was in bracket 1 plus k raised to n minus 1 divided by k in bracket 1 plus k raised to n. That was my formula for finding out present value of an investment factor of an annuity. Now, the formula for the capital recovery factor is absolutely opposite. And what the formula is? The formula is k in bracket 1 plus k raised to n upon 1 plus k raised to n minus 1. So by finding out this capital recovery factor, and what I need to do, I need to simply multiply it with the amount of loan that I am taking, and I would be able to figure out as to how much will be my EMI that I will need to pay every month. So in other words, friends, please remember, what is capital recovery factor? It is nothing but inverse of present value investment factor of annuity. So which means what? How can I also calculate the capital recovery factor? I can calculate the capital recovery factor by dividing 1 by the present value investment factor of an annuity. So that is how I can find out the capital recovery factor. So my capital recovery factor, in simple words, helps me in finding out my EMIs, right? And this is what you can try and experiment with, the EMIs that you are paying for any of the loan that you may have taken. So let me give you a small case here. Ananya borrowed a loan of 14,000 rupees at a rate of 9% for 3 years. Prepare a loan amortization schedule using the given data. So the loan has to be repaid annually, right? So the loan has to be repaid annually. And therefore, what you need to do, you need to first find out the capital recovery factor. And once you find out the capital recovery factor and you multiply it with the amount of the loan that you have taken, you would be able to find out as to what is the amount of EMI that you will need to pay periodically. Should not take you again more than 1.5 minutes. Your time starts now.
The factor will be 0.395 and the installment would be 5530.76. Would that answer?
Wow, that's really very good. I think that's a super fast speed. It's really good, really good. Fantastic.
Yes, sir, 5530.
How much is that?
5532.
Very good. 5532. Fantastic. Absolutely fantastic. Absolutely fantastic. Absolutely fantastic. Very good, friends. Very good. So what we have done, and this is how you will prepare your loan amortization schedule. So as you have worked out, your EMI is going to be 5531, and this is how it's going to happen. So for 3 years you will pay. For the first year you will pay this, second year you will pay this, and third year also you will pay this. And on this, out of this 5,531, your interest component is going to be 1,260. the balance amount is going to be on account of the principal repayment. So from the principal amount of 14,000, when you deduct the amount of principal repayment, what you get in your hand is 9729, and likewise you find out, and you can see at the end of third year the balance outstanding is becoming 0. So that's your capital recovery factor. So friends, what we have discussed, the time value of money, and it has got two aspects, and those two aspects are compounding and discounting. And we have also understood as to what is sinking fund factor and what is capital recovery factor. So with this we come to the close of our discussion on the time value of money, and now we will immediately go to the fixed income securities. So it is now 3:27. I think it's almost about 2 hours since we've been discussing this topic, and I'm sure all of you may be wanting to have a break for 5 minutes, and we can certainly take a break of 5 minutes and a comfort break. And so let's come back by 3:35. All of you, please be in front of your computers by 3:35. Sharp at 3:35, we start the session. Thank you so much, and see you at 3:35. Thank you.